Yet, despite all these offsets, the tariff shock is here, and it is further dimming already weak growth prospects. This is clear even in the US. Growth is revised down from last year, the labor market is weakening, and inflation has been revised up and is persistently above target, signs that the economy has been hit by a negative supply shock.
We are here to discuss the world economic outlook. So
this is more of a downside risk in a sense. This is what we have to think about what could happen if negative trade measures were implemented, if some restrictions on exports of critical materials were implemented. This is something, of course, we're thinking about. We have in our report a downside scenario. These are not these very specific details of what is being considered right now, but it illustrates the potential for the global economy to take a turn for the worse if trade tensions become more elevated. In the scenario that we explore, overall doing quite well, especially in the US. But if you leave that aside and you look at investment outside of the tech sector, it's actually declining compared to last year. And that reflects in part the uncertainty that many businesses are facing when they're thinking about the future and scaling down their investment plans. So that uncertainty is already weighing on the outlook.
Impact on like the fragmentation of the global economy. I wonder whether you could share some.
Easing of weakening of the dollar is something that helps financial conditions in many emerging market economies, especially countries that have dollar-denominated debt. Whenever the dollar becomes weaker, the debt burden is slightly alleviated. And so that has contributed to improving financial conditions in those countries.